Sorry. So good morning, team. So welcome to the call for 8 o'clock today. I'm your host today. I'm Kevin Alex Bent. So what we'll be talking about today is price, right? And I want to actually point this out because this is very important, guys, for persons coming into the market and be able to see things, how price really affect the market. Okay, so what we're going to be talking today is price, bullish reverse signals, as well as a tweezer formation. You may want to write that down, and a bearish reversal signal as relates to a tweezer formation. Okay, so basically what we're going to be looking to the market, to the markets, and then we're going to be looking at price, and then how does that affect the markets. And basically that's it. Basically that's it. How does the price affect the markets? All right, and be able to look at it. So here we go. Right now we're going to start by looking at what is price. First thing, what is price? Anybody have an idea what is price? No? Okay, so price in itself is when buyers come into the market, sellers come into the market. Well, in entirety is when you have traders that comes into the market and taking place in whichever activity they see best. So basically, you will have buyers that comes in the market want to buy if they feel that the market is going to go down, so they will be actually selling at that point in time. So right here, we identifying all these red candles here would indicate that, for example, Great British Pound versus USD, the traders comes into the market, and it can be banks, it can be hedge funds, it can be big corporations, and it can be retail traders like yourself. Okay, and you feel like the market is going down and you want to actually sell. So once you're doing a sell, it normally goes into a trend that known as bearish. Okay, and you can look right here and you'll see that plays out right here into the market. Let's put that down there for a minute, and you will see right here. So that is known as a bearish, and price, as price affects the market, and it is a feeling or it is a prediction. So every person that comes on the market, it's based on prediction, their own personal prediction. So everybody thinks they're right. So once you see this happening right here, the market goes down and a lot of persons are selling off. So who decide to? That's how it affects in the market. It plays out here. In other words, here as well, you see going up. Right here, for example, all that right here. This right here. All this movement in the market. If you want to put it from here to here. This is known as a bullish in the market. And this is when there's more buyers in the market.
Support?
No, buyers. Buyers in the market. When you buy, the market goes up. Okay? Very important. Got that?
Yeah, the reason why I asked if it's support is because I read that it said when you have more support level, it's based on a surplus of buyers. That's why I was just confirming what I read.
Say that again.
So I was saying I read something that says support levels indicate a surplus of buyers, which is where you're indicating right now.
right? But what I'm trying to actually is to show that the support and resistance is always going to be playing out in the
Yeah,
market,
man, I know that. I know that.
right? So right here, for example, if you look here, for example, after this candle right here finishes and it starts this one, there is support and resistance taking place right between here.
Right.
As simple as I see it right here.
Mm-hmm.
Okay, and then it breaks, goes down, and start here. So there's support and resistance that is taking place right in between here. So you could even go here again and say support and resistance, and it breaks, come down here, and support and resistance goes back up, right? But we're not looking at the support and resistance today. What we're looking at is a simple thing as price, right? Price. And price does affect the market in two different ways, going down or is going up, all right?
Correct.
And you need to understand these terminologies in simple terms, that is bearish going down, bullish going up, right?
Mm-hmm.
Also, what we're going to be looking at is the tweezer formation, bullish reverse tweezer formation. So where can you find this? Where can you find this? So identify certain areas where you can look at bullish and bearish tweezer formation, and you'll see what it looks like. They have these little tips, like sticks. I'm gonna take off this real quick. I'm just gonna take off that. So this is right here is a good example of a tweezer. You'll see it looks with a long candle ends. Normally, to find a perfect one to show you, it is like this as well. But here it is. These are known as tweezer formations. Okay. Normally, they have the same amount of candle width in height or similar. So if you go across here, I think I found one over here, and right through the chart, you will find them. But when you see them, you need to know what they are. Here's one right here, and it doesn't have to be the same candle or the same price that is happening. Meaning it doesn't have to be a green candle and both of them have to be green candles, meaning that the market is in a bullish state. It can be bullish and it can be bearish, but they're not above each other. They're actually on the same level. So this is right here is a perfect example. Here they are. This is called tweezer formation, okay? And when you're seeing tweezer formation, normally it plays out in consolidation. You may want to write that down, okay? So the market is contracting, consolidation, the same thing. We use those words interchangeably. Contracts, consolidating, and right there, normally you'll find tweezer formation taking place. You will see it. And it doesn't have to be two different candles. It can be two same candles, or it can be one of each. Okay, it can go into this direction here, going up here, or it can be a formation. In other words, here. But you want to look for the smaller one. So this is a good example right here of it going up. And this right here, this is one and it is known as a bearish. Bearish. Very important. So when it sticks here like this, currently this one right here, let me mark it. This one right here is a classic example of bearish tweezer reverse signal. Okay, I'm gonna write it down so you guys can put it on the chart so you guys can have it to watch it later on when I upload the lesson. And for the persons who are not here as well. So this is known as a bearish reversal signal. SIG. Okay, bearish reversal signal. Great stuff. So this is what this is right here. And I'm actually going to make this a little bit more smaller. About 10. Change the color. Put the color the same thing in blue. I think you guys can't see that, right? It's a bit rough, right?
Yeah.
Yeah, let me change the color.
Probably yellow.
Let's try yellow. All right, yeah. So this right here, I'm gonna even put it on it. I'm gonna put it right here, on top of it right here. Okay, and we're talking about this area right here. These two candles, and the wick right here. These two wick going up. This is known as bearish reversal signal. Okay, very important. Now let's see if we can find bullish. I want to find a good example, show you guys to identify. And you know, right here, when the market is contracts and then it goes into a trend. So all this area right here would be a trend, and this will be consolidation, expansion, contracts, and then it goes into a trend. You guys can see all of that plays out. Went through all of this already, right, guys? Right, team?
Yes, sir.
Yeah, yes, sir. We went through that.
All right. So here's one more right here, but this one right here is going in the opposite direction. And this is known as a bullish. Okay. Here's one again right here. Going right through and through and see if I can get you guys to see it. Here's one right here as well. It's going down. See it? Right there. And we can go as far as back as we want. Here's a bullish trend as well. Going up. Here is it again. Do you see it plays out? You seen it? Do you see the pattern?
Yes,
Here is
sir.
it. So he's able to identify. And when you see this, normally the market is going up. So right through it, you'll see it. You'll see it. Right? See it. Look at it. It's right there. Right in front of you. See there? See there? Going up. There they are. Here they are as well. But this one right here, as you see, it's different. But that's what happened in the market here. And we're able to identify what it looks like, basically. So I want you guys to be able to identify these areas and what it does after. So if you look here, and this one indicates, and this one confirms, and then it goes on to the trend. Okay, this one indicates, this one confirms. So the first one indicates, second one confirms, and then it goes into a trend. That's what the market operates. So look right here again, guys. This one indicates, this one confirms, and then it goes into a trend. Okay? Very important. And I want you guys to write this down right here as well. He's right here again, playing out. So we looked at price, and we look how price affects the market. What is price? We said what was, and then we're looking at the formation, a tweezer formation. And when we look at tweezer formation, we look at how it goes into a trend. And these are perfect example right here of what that is, okay? And we do say, when you see a candle appears, when you see a candle appears, when you see a candle appears, it doesn't mean that that is what is next is gonna happen. For example, if this was here and none of this existed, and you see this candle turn red and it started going down, or it's going across, it start to consolidate. What we need to do, and do remember that consolidation is that there is no major movements of the candles between each other, right? So there is a consolidation that is taking place right here, and you can see this candle here indicates, this one confirms, burn out all this wick right here, and then it goes into a trend. Very important. This big candle here is called a trend. And that would be in a sense that this here is going in a downtrend right here to here. So between here to here, went in a downtrend. So these smaller areas of things you need to understand. So the candles first indicate, you want to write that down, indicate, and then it confirms, and then it goes into a trend. All right. I don't like when persons call me right in the middle of my class. Excuse me, sorry. Hello? Hello? Hi. Hi, how you doing? I'm in the middle of a class, class starts at 11 o'clock. Can I call you back, please? All right, thank you, bye-bye. Sorry about that, guys. All right, so we understand that. So indicate, confirms, and then it goes into a trend. Very easy, very straightforward to see it. And you will see it keep on playing out right in front of you, right? Here it is, same thing again. This candle indicates after it goes here. So it went into a downtrend here. Went into a downtrend from here to here. And then went back up to an uptrend from here to here. And then this candle indicates. So when you see that start turning red, you wait. You do not do anything at that point in time. You wait until the other candle confirms that it's actually going down. So you realize right here, this is not telling you that this candle is going down or up. Both of them are on par. And this is why I call a perfect example of a bearish reverse signal. So once you see this happening, they're not bigger than any. Right here. This area right here. I want to bring this down a little bit. I'm going to take this off. This area right here, these two candles right here, they're not bigger than any. Each other are the same level. These two candles right here. These candles right here. And then it goes, indicates, goes down into a trend. All the way down. So a very useful thing to actually be able to identify these areas right here. And what happened after. Very important. Very important. Okay. Now, when that happens, you will see the same thing happens here. This candle didn't bigger than this one, or this one same size as this other one right here. Then it goes into a trend, and you will see them playing out. Go into a trend. Go across, you'll see it. And remember what we talked about as it relates to the market. Expands, goes into a trend, and then it starts to contract. So right here is contraction right here. I went through all this already. Then it goes into expansion, and then it goes into a big trend. So
label the areas in yellow, no, please.
Huh?
You're describing the areas again, but label them in yellow like it did the bearish reversal. See that bearish reversal signal?
Oh.
They're describing something else. What it is now, so we can know it's different.
All right.
In yellow, please.
So right here, this is known as a contraction. And you guys can see these example here. And then here, all this right here is known as expansion. The market expands in between here. That's why these candles are smaller than these ones. And all this is the market is affecting is something called price. Price is playing out right there, right now. And this is known as expansion. 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 That's expansion, and then it goes into a trend. And this here goes into a trend. So if we and you'll see this plays all right in the market. Trend. So this right here is trend. All this right here going up. This little red candle right here, this little wick right here, you call that retest. Didn't happen much, but it's just there. This candle right here. This little red candle right here. This is called a retest right here. So market retest. That's a little retest right there, happening right there. And then the market continues into its trend. And this trend is known as a bullish trend. Bullish trend. So all this is playing out right here. Contract expansion, retest, and then it goes into a trend. And all this trend is here is called a bullish trend. Okay? You'll see plays out right here. Trend. tweezer formation. Okay. Same thing here. Go into a trend. And what we're looking at right here is identify what happened right here. And what happened right here, the market was going across consolidation. It finishes after done a bullish, come back down, start to do a bearish, and then here it retests, then it goes back into something called indication. So the market indicates here with this candle, confirms, and then it goes into a trend. Very important. So these are things that are happening right here. And this is the same thing happening here that happened right here. Indicates, confirm, and go into a trend. Same thing. Same thing here. Indicates, confirms, go into a trend. And it continued to go into a trend. All these candles right here are called retests. So all this from here to here, the market is still on a downtrend. And I want you guys to understand that. So from here all the way to down here, it's still considered to be a downtrend in the market. Got it? Got it, guys? Clear? We're clear? So all these right here, the market,
yes, sir, it's clear.
You need
yes, sir.
So these are what is happening in the market. So how you read the market, very important, guys. Very important. And this is playing out right in front of you all the time. All the time. This is playing out right through everything. Playing out right in front of you. Right in front of you. So now you must be able to be a little bit more clear in what is what. You'll see it plays out. I hope everybody understands. Anything anybody don't understand? Everybody understand so far? Anything anybody don't understand, please tell me.
Don't understand the candlesticks.
Sheldon, you're speaking?
Yeah, that's me.
Okay.
How they go, the candlesticks go up and down with the determine whether they're bearish or bullish.
Mm-hmm.
Why on the graph do they do that?
Price.
The price of the product?
Price in the market.
Price in the market.
Trend.
So once you are a buyer, I am a buyer in the market, or a seller, or you are a seller, or Carl is a seller, is what is happening in the market. That determines what the market actually does. And the charts reflect what is happening in the market, okay? So right here, I know that in the market, we have more sellers than buyers in the market. If we look over in this period, here, August 23rd, here it is. 12 of August, see there? All this, 12 of August. All this happening in a day. Here is a different window. If you look on the bottom right here, you'll see 13 of August. So I know that between the 11 to the 12, partially, we had more sellers in the market. Between here at this time right here. Right here. Hold on. I got about a minute left on the call. Between here, let me move it over. Between right here, from here onwards, I know that we had more buyers in the market. All of this is a trend. From here to here. See it?
Okay.
Good. So you see the difference? How many red candles is over here versus how many candles over here? See what I'm saying? Look at it. Look what happened here. Look what happened here. You see it? You see it start making more sense to you?
Yeah.
Here. All this right here we consider to be what? Right here. What is this called, Shalon? From here to here. What is happening in the market right here?
Market is bearish.
All right. And when it's bearish, what happened? Is it the market buying or the market selling?
Market is selling.
Congratulations, sir. You learned something today. I'm so proud of you. All right, guys. Thank you so much. There's 1 minute left on the call. This was your lesson today. I'm your host, Kevin Alex Bent. See you guys on the next lesson, and we'll cover some more fantastic stuff. Thank you so much. Congratulations to each and every one of you. Bye-bye. This will be uploaded to YouTube.
Yes, sir.
All right, guys. Thank you. Bye-bye. Have a wonderful day. Great stuff. Great lesson. Hope you guys understand and learn something today. Thank
8 o'clock.
All right. See you tonight at 8 o'clock for sure. Bye-bye.
All right.
All right.